It's Vinod Aggarwal is the Managing Director and CEO at Eicher VECV and now joins us. Thank you so much for taking time out. Now let's start off by just talking about the CV cycles that we witness month on month. We've witnessed your sales catching up, but the numbers are a little bit low in terms of the pre-COVID level comparison. So from FY19 to last FY, your sales were down about 25%. Question is, when do you think you can recover this gap?
If you look at the CV industry, I think it's absolutely on the right track, and it is going as per our estimates. And as you know, last 3 years have not been very good for the CV industry. It was in recession, and recovery started last year, and now it's on the recovery path, and we are seeing very handsome recovery happening in the CV industry. And it has already reached the pre-COVID levels, like pre-COVID levels of 1920. And we had a very big fall in the market in 1920, that is pre-COVID. So therefore, now we have to reach the earlier peak of 1819. And we are very hopeful that we should reach the earlier peak levels maybe in next 1 to 2 years. And if you look at our fall with respect to earlier peak of 1819, we had sold around 73,000 trucks and buses in 1819, and last year we sold 57,000, which is lower fall as compared to the industry fall from 557,000 in 3.5 ton and above to 344,000 for the entire market. So therefore, our fall is less than the market, number one, and number two is market is on the recovery path, and we are expecting good recovery to happen in the coming 1 to 2 years. And of course, the biggest positive is the recent landmark decision by the Government of India to reduce the excise duty on petrol and diesel, as well as to put the duties on export of steel and other related steel products, which will be very, very good for the entire economy and specifically for the CV industry and in the entire auto industry. So therefore, these decisions which the Government of India has taken, that should cool down the inflation, and which should be further good for the entire economy as well as for the CV industry.
Be good for you as well. So walk us through what the outlook is going to be when it comes to the margins then. In light of that, where do you see your margins headed?
If you look at our margins, EBITDA margins last full years, we had an EBITDA margin of 6% for VECV, and last quarter our EBITDA margin was 7%. So therefore, with the further improvement in volumes, there should be some leverage impact. I can't talk of that how much will be the margin in the current year, but at the same time, I think when the volumes are going up and inflation also is expected to cool down, I think we should see good leverage impact.
Building on that point, Mr. Aggarwal, good morning. This is Nantara. So you're saying inflation has peaked out, volumes are going up. We have, of course, also seen that big excise duty cut on diesel, which is expected to bring freight rates down by what, 5 to 6%. So just want to stick with this a little more. What is this going to mean for demand as well as company like yours, capacity utilization?
Okay, I think before I come to that, I want to make another point with respect to the prices, which is with respect to the CNG prices. Surprisingly, the CNG prices has gone up significantly in last 3 months. For example, in the month of March to April itself, 2 months back, the prices have gone up by 26%. The CNG price is now in Delhi around 75 rupees a kg. And if you go back last year in August, it was just around 45, 46 rupees. So there is huge increase. So we are expecting that the government should intervene in this price increase, which is absolutely abnormal. And I don't know what is the justification to have this type of increase in CNG prices. And as you know, there was a lot of migration had started happening towards alternate fuel vehicles. Like there was a lot of migration happening in the light and medium duty trucks from the diesel trucks to CNG trucks, which had become almost 40% of the total market of the LMD trucks. However, with this increase in prices of CNG, in last 2-3 months, that migration has stopped to these better alternate fuels. And last month, the CNG trucks were only around 20% of the total market, which had gone up to 40%. So that is, I think, not understood that why the CNG prices have gone up suddenly like this. So I think that is where we are expecting that the government of India, like they have done for the diesel and petrol, they should do some intervention, or they should understand why the CNG prices have gone up significantly like this, which are not good for the industry. Now, coming to the our capacity utilization, first of all, I think we are consistently improving the capacity utilization. Like last month, we have produced more than 6,000 trucks and buses. And going forward, as and when the market is going up, I think we are very well prepared to meet the demand, and we have enough capacities. And the capacity utilizations are still, you can say, far from the overall capacity that is available. That is not only for us, that is for the entire industry, because we are still far away from the earlier peaks. So therefore, I think capacity utilizations, I am expecting these will improve as we go forward.
Aggarwal, that's a very important update that you've given us, that because CNG prices have not gone up and are going up, how the market shift is happening. 40% contribution now down to 20%. How have you managed to change for that? If there's now more demand, whether it is for the diesel commercial vehicles or even electric vehicles which you're in?
Yeah, now the people are moving back to diesel, because now there is, in some states, even diesel is cheaper than CNG, because it is absolute. Like, for example, if you take Punjab, the diesel prices are lower than the CNG prices in Punjab. Now, CNG prices are, I think, currently not regulated. They are all, fixed by the private operators. And I think they have just profiteering. In last few months, they have just gone scot-free. And the way the prices have gone up, that is not good for anyone.
Let's also understand then from you going forward in terms of your overall market share, because I understand in the quarter gone by, you lost about 60 basis points of market share on a year-on-year basis, and that was largely on the back of heavy discounting by your peers. Do you think that this will normalize? Where do you think that you can, regain market share?
Basically, we are looking forward to the long-term story. We are not, don't bother too much about what is happening in the short term. As far as the long term is concerned, I think we continue to be very strong players as far as light and medium duty trucks are concerned. We have become very strong in the bus market. Like, for example, another good is the recovery in the bus market. Bus market is now going back to almost normal. Like last month, we had a bus market of almost 4,500 to 5,000, the entire market. And in that market, we had 30% market share. So bus market share has improved significantly, our bus market share. And with the schools opening up and with more and more travel starting between the cities, and the tourists also started coming in, I think the bus industry is going to drive the entire CV industry in the current year. Apart from that, even the other heavy duty trucks or light and medium duty trucks or construction trucks, that also hold very good potential for growth. So therefore, I think we are expecting good current year.
That's the view. So you're looking clearly at the long term. And what about segments that you see performing well in terms of CNG, EVs? What kind of growth targets are you looking at for FY23? Are you looking to participate in tenders?
Yes, of course, we are participating in the tenders, and the electric buses also. I think there is going to be more and more action. And you have just seen the interview coming from CESL. Where they have indicated that the government is going to float a very large tender of 50,000 electric buses, which is very, very encouraging. And in the last tender, which has just been completed, I think there also we are going to get some small share, even though we are not getting big share, but we will get some numbers for one of the markets. And we are there in the electric buses. We are already going to supply in one of the cities in Chandigarh, and we will supply in the last tender also. And whenever the new tender comes in, we will participate in that as well.
Sir, I believe for the new financial year, the Capex outlay is about 500 to 600 crore rupees. What are you going to be using this expansion for?
I think this capex is on various things. First of all, we have this BS6 Step 2 coming up next year from 1/4/2023. We will have the further stringent emission norms. So there is capex happening on that. And then we are going to invest more in our plants. Like we had set up the Bhopal plant in last 1.5 years. And there, of course, still we had not set up the paint shop. So we will spend on the paint shop in the Bhopal plant. And apart from that, we are expanding in our components business. Components business, we are having very good traction. There is a lot of backlog of orders. We are expanding capacity in the components business. And we are also developing more and more new products. So therefore, this is on a mix of various things.
Okay, so that's company there for you, the 500, 600 crore rupee Capex program. For now, you know what all. But more importantly, commercial vehicle usually seen as an informal indicator of the economy on ground. Very bullish commentary that is coming in. The red flag being the rising CNG rates and how that's tilting the market demand from CNG trucks and buses to diesel ones. So let's see if the government provides any intervention as has been sought by VECV. Thank you, Mr. Aggarwal, for being live with us on the edition of the